Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and in today's episode, we are going to talk about two of the companies that I currently own. And the first one that we're going to be talking about is Altria. It has been having some horrible news lately with what was just announced yesterday afternoon, which was right after I shot my video. I was talking about how Altria had been one of my best investments going into 2021. It has been having rapid returns, and also we're going to be talking about Broadcom. There's some recent news that was just announced with Broadcom that I think just legitimizes this company's software business just that much more. So we're going to be talking about its business deals with Symantec and Google Cloud, how that will be affecting the business, but also we'll be talking about Altria, how this new deal potentially that could be happening with the Biden administration, which will be lowering nicotine levels in cigarettes, how that could be affecting Altria. And I'm going to go over in both of these why this negative news for Altria is being overblown, why you should still be buying the stock, and for me, this is a buying opportunity. I see this as an opportunity to increase my investment in Altria, and I'll go over that reasons with this in this video, and why the deal with Broadcom just makes me that much more affirmative with my position in Broadcom. But I hope you guys enjoyed this video. Thank you guys for tuning in. These are the 22 companies that I currently own in column A right here, where I'm hovering over with my mouse, and these are the charts on the right that are loading in. These are the charts that I work on every single month to update for you guys, which track my annual and monthly dividend income and my portfolio value, as well as my monthly YouTube income, which I disclose fully on the channel. I disclose my buys, my sells, my dividends, changes to the portfolio, winners, losers, all that stuff. And these are my 5 investing goals for 2021 and my 2021 stock market prediction. If we go back here to M1 Finance and scroll up, you'll see my name. And when I click Refer and Earn, it will show this tab, which refers you guys to M1 Finance. This link is posted down in the description. And also, if you guys want to get help started with investing, as you use this link to get signed up, not only can you get $30, but I'm offering, as usual, mentoring calls. So if you guys are brand new to the market, or if you have questions about dividend investing, growth investing, or anything of the like, you can check out that email that is down below for a mentoring call, and you can set that up with me, and I can help discuss potential investment opportunities with you guys. It's not financial advice, but it's my way of contributing back to you, and it's your way of supporting the channel. But if you can use that referral link, that will give you $30 for getting signed up, and that is a great deal in my opinion, and you'll get access to all these free features, including my investing pie. And so I hope you guys enjoy this video, and what we're going to do is what we're going to start off with is that you see my all-time chart. You see right here, and if you click year, you click quarter, you click month, you click week, and you click day, and we're going to sort by biggest returns. And it's crazy to see the disparity of how different some of the returns are on my stocks. Some of the more defensive plays are up massively, and some of my other plays are down massively as well. So it's definitely kind of a wishy-washy situation with today in the market, and it's really interesting because overall, altogether, let's go and update this number. Let's see. I am almost exactly dead even. I'm down 22 cents, which for a $12,000 portfolio is basically nothing. I'm down 22 cents on the day, and my return is 0.00, less than a fraction of a percent. And the return for the S&P today, all 3 indexes are down. SPY is down 0.88, Dow Jones down 0.94, NASDAQ down 0.96, and that's really interesting to see a day where my portfolio is about dead even. You can see, yeah, now I'm down 1 penny, so almost exactly break even from the time I'm filming this video. But if we go back to the day chart and we sort by best returns to worst returns, you'll see Johnson & Johnson, Kimberly-Clark, Southern Company, a lot of them having good days. But if we scroll to the bottom here, my worst performer on the day is by far and away Altria. We have some that are down a little bit. Nextera Energy, JP Morgan, Caterpillar's having a pretty bad day with 2.5% down. But Altria is down over 4% on the day, and it was actually even lower than that just a little bit ago earlier this morning. Yesterday, it finished down 6%, and at one point, even this morning, it was down another 6% as well. At one point this morning, as you can see where I hover my mouse, it touched right above $45 a share, and just yesterday afternoon, it was 52. And this is coming from one of my most boring investments, Altria, which doesn't move at all. Its big green days and its big red days are usually like 1% move up, 1% move down. And now, when you look at these prices, you see this massive steep drop off, and this is one of the biggest moves on either way, on the upside or the downside, that this company has had in a long, long time. And the reason being why this company had such a massive downturn is because of what was announced yesterday. Tobacco stocks drop on the report Biden administration is planning to cut nicotine levels in cigarettes. Tobacco stocks tumbled Monday on a report that the Biden administration is considering whether to cap nicotine levels in cigarettes. cigarettes. The report, which cited people familiar with the matter, was published in the Wall Street Journal. The paper said the discussion came as public officials approach a deadline to say whether they plan to seek a ban of menthol cigarettes or not. The Biden administration is trying to determine if it should reduce nicotine levels in conjunction with a methanol ban or as a separate policy, the people told the Journal. Now, what I am going to tell you guys is that I am not worried, and I'm going to tell you multiple reasons why. This company has had governments go after it for decades, and I want you to think about it for a second. Cigarettes kill people. They do. Tobacco products in general kill people. They're not good for your health. Everyone knows this. They are not promoted whatsoever. So you might be asking yourself, why hasn't the government shut this down decades ago? 10, 20, 30 years ago? Why have they not shut this down? Why have they not gotten rid of these products? It's for the tax revenue. At least that's my reason why I believe why this company has not been shut down and all the other tobacco companies like it. Sure, they'll have restrictions and regulations, but really it's one of the biggest sources of tax revenue. Alcohol, tobacco products, things like that are taxed very, very heavy. And if we go back to that article, and indeed all of this does pass, this first of all, this is all rumors. This is all speculation. It's all something that could potentially happen. Nothing is official yet. Nothing has happened yet, okay? But first off, this has not passed, so they're already pricing in the rumor, the potential of this happening. And this hadn't even happened yet, but let's say that it does. Let's say that Altria starts to feel some of the pain from this being passed by the Biden administration. Here's where I want to talk about some opportunities where this company does not have to focus on so much about what's happening with policies or trying to lobby certain politicians to get them to influence their decision making. When you look at these numbers, these 4 bullet points give you an idea of just how profitable this company is, even with people quitting smoking in massive amounts, okay? Their diluted earnings per share growth was 9.3% compounded annual growth rate from 2016 to 2020. And this is a time when people are quitting smoking. So remember that. They're growing at 9.3% earnings per share. Dividends was $27 billion. That's something that they do not want to stop. That's the main reason why I own this company, to get the massive amount of dividends that they'll pay. But the more important number here is share repurchase. $6 billion were repurchased for shares from fiscal year 2016 to 2020. So in a 4-year period, they're buying back on average about $1.5 billion a year. Share repurchases are programs that are approved but are not absolutely required. A company can cut a dividend and it will have massive negative effects from it. If Altria were to cut that dividend to zero tomorrow, expect the stock to go down 10, 15, 20, 25% in a day. But if this company didn't buy back shares for a year, there's pretty much no negativity that comes from that. Share repurchases are not scheduled, they're not declared ahead of time, and if they don't want to buy back shares, they don't have to. If they're feeling the pain and they no longer have that $6 billion to buy back shares because of the bill that passed, then okay, they can focus that on the business or focus that on dividends or whatever. And that's the way that they've been able to increase that dividend year over year, even with regulation going against them, even with everyone quitting smoking. And you can see this dividend payment as the share prices went down. It went from the $80 a share range all the way down to the 40s, pretty much being cut in half in the last 2 or 3 years. The dividend has steadily increased from 57 cents to 61 to 66 to 70 to 80 to 84, and now last year they raised it a small 2% raise all the way up to 86. And they're due for another dividend raise here in the next 6 months or so, and so it'll be interesting to see how much that company raises that dividend, if at all. But regardless, if you take the share price today, which once again, it's actually starting to recover a bit to 47, it was just at 45. If you take today's share price and divide by the dividend, so let's take the dividend of 0.86, multiply times 4, you will get a $3.44 annual dividend payment. So take 3.44, divide by the current price of 47.12, and right now you're getting a dividend payment off the time that I'm filming this video of 7.3%. So if you were to buy this company, buy it off of today's share price, the time that I'm filming this, and this company never increased the dividend, the share price never went up, it stayed at $47 a share, year in, year out, never growed at all, you're still getting a 7.3% annual return. And that already is a pretty substantial return. So basically, if this company does start to uptrend in share price, which I think it will over the next 1, 2, 3, 4 years, that's great. But if this company never budges at all or even goes lower, if it stays in this $40 to $50 a share range, I'm going to keep buying. Because when I buy this company, I'm basically betting that they're going to be able to maintain that dividend. And if I'm right, I will be getting a guaranteed 7, 8, 9% return depending on the price that I buy at. That is incredible, and you cannot compare that to almost any other company in the stock market that isn't having massive issues. And if you look at the different brands that this company has, like Philip Morris, the spinoffs that they had a while back, the U.S. Smokeless Tobacco Company, John Middleton, STE Mitchell Wine Estates, they have a winery business as well, Philip Morris Capital Corporation, an Altria company. And more importantly, they also have investments in diversified categories as well. It's not just cigarettes and tobacco products. They obviously have their big stake in Juul, and that's one of their big negatives about why this company has went down in price over the last couple of years. Juul, due to regulation, has had some negativity, but I think it'll be fine. I'm not too worried. More importantly, they also have other cash flowing investments such as AB InBev, and their ticker symbol is BUD. And now BUD, if we look at the last 5 years, their dividends are up, their dividends are down, but they're steadily paying cash flows time in and time out. See $2.30 payment, $1.70 payment, $2.19, $1.88. This company is constantly paying out dividends, and all Altria has to do is wait. They don't do any work for that. Every year they get a dividend check from their massive investment. I believe I could be wrong about this. I think they own about 10% of Anheuser-Busch. I could be wrong, but anyways, that's just free cash flow for the company. And they also have a wild card, which I think in the long run could be something big. While they do have their joint venture with Helix Innovations, Kronos Group, they have a massive stake in. Ticker symbol CRON, Kronos. They have a 45% stake in Kronos. And I think that this does two things. I think one, that it gives investors a little bit of a floor because so many of the shares are bought and being held by Altria. So it's really interesting there. But more importantly, if marijuana does become recreational legal in the United States, this company is going to see a massive upwards move. And that's what happened in late 2018 and early 2019 when the shot up to $20 plus a share. And then so far here back in early 2021, it shot up as well and it's starting to come back down to earth. But as this company starts to get more partnerships, open up new locations and sell more of its product, that's just going to be a bigger opportunity for Altria. And not only that, they're going to be able to collaborate on products that they sell. And I just think this is a good opportunity and a good setup for Altria. And I think people are overblowing this news 100%. So Altria, one I'm still buying, one I'm not worried about. And if you're buying it today, you're getting over a 7% yield. And I will be a buyer of this company. Now, next up, we have my number one investment. Okay, I own a lot of this stock, and it is not one that I'm going to sell anytime soon. The stock that I'm talking about is 9% of my portfolio is the target weighting, which is Broadcom. And it's been hit hard this week, like pretty much all tech and high growth stocks. And why I love this company is that it's the perfect blend between a dividend growth beast, a high dividend yield stock, but also a big market cap grower. I think if you're a growth investor, Broadcom is interesting. I think if you're a dividend investor, you're looking for yield, I think the stock is interesting. I think if you're looking for a dividend growth opportunity, a company that will raise its dividend year in and year out, I think it's interesting. Broadcom is the all-around perfect blend for what I look for in a stock. And after this news that they just announced, this just affirms my reasoning for buying them just a little bit more. Broadcom moves its semantic CA software portfolios to Google Cloud. Broadcom will deliver its suite of semantic and enterprise operations software, including CEA, on Google Cloud. Under a strategic partnership, Broadcom said the partnership with Google Cloud will strengthen its cloud services integration throughout its portfolio of security, operation, and DevOps applications. Broadcom said that it has migrated its semantic web security service and cloud access security broker onto Google Cloud and will soon move its other cybersecurity applications. Now, what we do is that if we look at this investor relations page for Broadcom and we go to the products tab, okay, you will see a lot of hardware products starting off. You'll see storage, adapters, controllers, a lot of fiber channel networking systems, and switches and bridges and semiconductor chips for Bluetooth and sound systems and wireless connectivity products and all types of things that this company produces. And while you look at their hardware, physical products that they sell, that is very interesting. And that business alone is very, very good. But if we scroll down here and we go to their software section, this is what really gets me excited because they have application development, testing and quality, identity and access, mainstream compliance and data protection, operational analytics, mainframe operations management. The list goes on and on. The amount of software that this company sells is massive. It's starting to become its biggest business, with security also being one of its highest profitability streams. But software is a more higher margin business. They still have an incredible hardware business business. And it kind of reminds me of a stock. You may have heard of it. Have you ever heard of this company called Apple? Apple is becoming slowly less of a hardware business and more of a software business. The company Apple will sell the iPhone, and that's great. They'll make a good margin off it, they'll make good money off of it, but that's not where it ends. They'll also have the App Store that they'll make money off of. They also have Apple TV Plus, they also have Apple Music. They have lots of other services that will make them money not only as you buy the iPhone, but as you continue to use the iPhone every single day. And speaking of the iPhone, every time one of those is sold, Broadcom makes money. Okay, great. And as they sell those products, they get cash flows from that. They also have their software solutions. Broadcom to me is an interesting take. It's kind of like the semiconductor version of Apple's transition from hardware to software. 10 years ago, Broadcom had nothing but hardware revenues, and that was pretty much exclusively all their business was. 5 years ago, still the vast majority of their business was pretty much all hardware. But now, slowly, they're transitioning from less and less reliant on hardware and more reliant on software. And now it's getting to the point where it's about half and half. And I think very soon, the software side of their business will become just as big as their hardware business, if not bigger. And so I think this is a really cool opportunity for Broadcom and just reaffirms my position one more time why I love this company. Their partnership with Google Cloud, if they didn't have it, guess what? They're going to be fine. But now that they have it, that just gives you one more bullish reason to own it. So I think with their awesome partnerships, their incredible amount of profitability, their hardware solutions, their software solutions, their massive amount of patents, their massive amounts of research and development, their incredible CEO, Hawk Tan, which has the weirdest name ever, I know, their incredible CEO, which leads this company, I just think that for all these reasons, it will continue to stay the number one investment in my portfolio. Now, I told you guys in my last video that I just hit my 1 year anniversary, and April 3rd is when I started my portfolio. So let's go ahead and look at that. April 3rd, this stock was trading at $234 a share. That's what the company closed at. The company is now double that price at $460. Now, I've seen massive returns in this company, and I am not stopping there. I expect a lot more. I expect this company to fully get to 500, 600, 700 one day, maybe pretty far out, but one day, even to get this company into the thousands. So I'll be holding this company long term. It will continue to stay the number one position in my portfolio for quite a while. But not only Broadcom, that's also why I'm buying Altria. And I hope this guys gave you a little update for what I like to look for in stocks and why I'm so excited about these two investments. But thank you guys so much for watching. Like I said, if you want to do a mentoring call or if you want to get signed up with One Finance, you can get a free $30 just for getting signed up and depositing $100. But thank you guys so much for watching, and I'll catch you guys next time.